Good morning, everyone, and welcome to Trading Psychology webinar. And this is the 2022 edition. This event is brought to you by Timing Research and Trade Out Loud. The event is fully recorded, and all the recordings will be available as soon as they're processed on the Timing Research website. David Cosmeter and I will be your host today. So we just want to remind you that all information provided today by all the presenters is for educational purpose only. It should not be construed as investment advice regarding the purchase or sale of securities, options, futures, or any instrument of any kind. Trading involves a high level of risk and may not be suitable for all investors. You could lose money. Before deciding to trade, you should carefully consider your objectives, level of experience, and risk appetite. Individual performance depends upon each person's skills, time commitment, and effort. Results may not be typical, and individual results will vary. So you must do your own research and make your own trading decisions. So with us today, again, last day of this mega trading psychology event, we have a fantastic lineup of pro traders that are happy to share their strategies, tips, and tricks with you. And most importantly, their mindset, their psychology. So today we have AJ that is going to kick it off today. AJ, you have the mic, you have the stage.
Great. Thank you, Anka. Thank you, David. Hi, everybody. I want to just thank the folks over at Synergy Trading because they come back with each one of these mega events with a theme. And so what you should be pretty excited about is that because they challenge us as presenters to not stick with our same, off the shelf boilerplate presentations, you're always getting fresh content. And so that's what I'm going to give you today. I believe you're seeing my screen. I've got a presentation that I put together, and a lot of my presentation today is actually showing you trades, showing you tools, showing you charts. So we've got a couple of slides here, but for the most part, we're going to be showing some live things. So I put together this presentation for Don't Let Success Be a Surprise, and how you can use a simple tool that constructs foolproof trading plans for selling options. Now, you can use a simple tool, and we're going to talk about that a little bit for any trading, but I use it specifically for selling options. Selling options, as you know, options give you the ultimate flexibility, but at the same time, selling options can also, with flexibility, sometimes comes complexity. So with that said, let's get into it. Now, I always like to show this ever since my mentor published this about a month ago. He published this comment on Facebook, and he said, "I just hate to be the guy to break this to you, but most of the self-described experts out there have their heads firmly up there. Bleep," right? "There are shortcuts to success, but none of them involve magic. So shame on you if you get involved in some scheme that you know sounds too good to be true," right? And so I want to make sure we start our presentation out there, because nothing I'm going to be telling you is a scheme. There are shortcuts, because when it comes to controlling our emotions, controlling our being disciplined, and also as a side effect, minimizing the amount of time we waste at doing this, there are shortcuts we can do to, take care of the repetitive tasks, but it's not magic. So let's keep going here. So how do I overcome emotions? How do I stay disciplined? And it's very straightforward, and you should take a note on this. And it's something you've probably heard a bunch of times before, and that is you have to plan things out. You can't go into the markets, whether you're buying stocks or options or commodities or futures or Forex or exchange traded funds or even mutual funds or real estate. You can't go in there without a plan, because the minute you go in there without a plan, all sorts of emotions play out. So it's all about doing a good plan. And then the second piece of the equation is making sure once you've got this excellent plan that you trade it, that you pay attention to it and don't disregard it. When I find somebody who has gotten into trouble in their trading, and I don't have to find them, it doesn't take much to find them because they find me. When you find somebody like this, you can always trace it down to they didn't have a good plan, or they had a great plan, but they didn't follow it, right? And so you might say, okay, I kind of buy into this, but I'm not very good at planning. What does a good trading plan include? Well, really straightforward. It answers those questions that we've been learning about since childhood, right? You got to answer who, what, when, where, why, how many, and for what price. Write this down. Who, what, when, where, why, how many, and for what price. Now, I like to sell options premium. Now, I don't know how many of you are tuned in to selling options premium, but one thing we like to do is sell boring stocks that are trading sideways. We like to trade against these because boring stocks going sideways, they make premium sellers a lot of money. And one of these stocks that I've been looking at is Schlumberger. This is a company that is in the energy sector. They make all the parts for new things like oil refineries and oil wells and all of that good stuff. And one thing we know right now is that a lot of oil companies and the investors that invest in oil companies, they don't want to grow or invest in anything. They rather have stock buybacks and dividends. They don't want these companies to invest in fossil fuels because they see the writing on the wall. And so a lot of companies like Schlumberger are stuck with just their maintenance contracts, and so their stock price tends to go sideways. All well and good. I want to sell premium against this. So one of the things I might do when I'm answering these questions and making my trading plan is I might add, who would be, what is the symbol I'm trading? In my case, I'm looking to buy some Schlumberger January 2023 $55 puts, right? That's because I want to short Schlumberger as soon as a top is found. When I get my signal that a top has been found, I'm going to use my broker platform. I'm opening leg one of an option selling strategy. What am I going to do? I'm going to buy to open. I'm going to be buying to open 13 contracts. That's based on risk management and liquidity. All of this goes into my plan. And I want to make sure whenever I'm buying, I buy low, right? I have a target price that I calculated. I want to make sure I buy below that target price. If I'm selling, by the way, I want to make sure I sell high. I want to sell higher than my target price. So you have to make sure that when you put together a good trading plan, I've seen some of the trading plans that people put together and they don't answer these questions. You should be able to answer all of these questions: who, what, when, where, why, how many, and for what price. So, okay, there's also some other guidelines about your plan. This is going to be pretty straightforward. It has to be thorough, yet simple and concise. In fact, here's how I know if it's a good plan. I can hand it to a 10-year-old, somebody who here in the United States is in 4th grade, and they can execute it for me. If my plan is not simple enough, concise enough, but also thorough to make sure that it gets done right, that a 10-year-old, a 4th grader can execute it. If that's not possible, then my plan has to go back to the drawing board. I have to simplify it. So I recommend, if you want to be successful, if you don't want to have white knuckles at the end of every trading day that you decide to go into the markets and buy and sell, if you want to make this a consistent business, then not only do you have to plan, but your plans have to be simple, concise, but yet thorough. And you should be testing these plans. You shouldn't just make a plan and then go with it with real money, you should back test these plans on similar patterns and then forward test them in real time before you trade real money. What is forward testing? Anybody ever heard of the term forward testing? Forward testing is another name for paper trading. It's just that I differentiate between the two. Paper trading is what I do when I'm trying to learn a new strategy, learn a new trading methodology, learning a new tactic. For me, that's what a paper trading is. Forward testing for me, although it may be the same thing as paper trading, it's where I know what I'm doing. I'm just testing out my plan. I'm forward testing because it's so easy to back test something. You find a similar pattern and you run it through, but hindsight is always 20/20, isn't it? So you can use sim trading to forward test it in real time. That's the real test of your plan. So I mentioned, by the way, that I like to trade options and that options have a lot of flexibility. They do. Options allow you to trade in all sorts of different circumstances, but with that comes complexity. So you better believe that planning when it comes to trading stock options is really important, right? Now, in order to really put together a good plan, you have to make sure you understand what successful trading and investing incorporates, right? So you might want to write down these 4 points, because whether you're trading baseball cards, whether you're trading real estate, whether you're trading businesses, or you're trading things like stocks, ETFs, indexes, commodities, Forex, crypto, or derivatives like options and futures, any successful trader always has in their repertoire, or what they're taking into consideration, risk management, pattern recognition, strategy and investment vehicle selection, and timing. This is the same 4 characteristics or 4 things you have to take into consideration no matter what it is you're buying and selling. Buying and selling classic cars, buying and selling paintings. And if you're not taking into consideration these 4 components, you're going to come up not successful. So, okay. Another fact you have to understand, despite the talking heads out there telling us that 20% of all the wealth in the world has disintegrated in the last few months, there is a lot of uncertainty, especially with what's going on right now. But you have to understand that what's happening in the markets, especially if you play it right, it's going to set you up for months, if not years to come. And that's because money is not created or destroyed in the markets. And again, the talking heads will have you spinning and reeling and clutching your pearls. But the only thing that happens in markets is that money moves from one person's hand to another. So when I talk about playing it right, it means putting yourself on the correct side of the transaction. And again, that's one of the reasons why I love stock options, because it's so easy to put yourself on the correct side of the equation, because options profit on all sorts of different mechanisms. So you just have to figure out what mechanism is out there, and then you just optimize your option strategy and individual option selection to profit off of it. So what do I actually invest in? Well, I sell theta decay optimized option premium. In other words, I profit on time passing by. And you might say, listen, you keep talking about options, you keep talking about, planning on options, but aren't these things risky to begin with? Listen, there's every investment vehicle in the world that you can buy and sell traditionally where you make money if it goes up in price. Now, as you know right now, most investment vehicles are not going up in price. So you want to have something that can also make money if it goes down in price. Now, in a lot of our securities and things, we can short them. We can sell to open and then buy to close at a lower price and make money. So a lot of times we do have two strategies, but what if it goes sideways? Can we make money if it goes sideways, if all we can do is either go long or go short? Well, with options, you can make money if it goes sideways, because you can also make money with options just watching time go by, because options have that expiration date. They can act as a wasting asset, which means if you sell options and let them waste away, you'll make money, right? The other thing that a lot of people don't pay attention to is that options make money when there is fear in the market or when there is confidence in the market. They actually are influenced by the amount of fear or confidence in the market. So mathematicians have said that there's 26 different ways to trade options. So like I said, there's tons of flexibility, and that's what I love it. But with that flexibility, you have to come, there's understanding and complexity. So you have to, in order to be successful, in order to keep the stress down, in order to minimize the amount of time you spend doing this stuff, you have to have a plan. These options are derivatives, right? Just like futures are. And they're typically bought and sold to hedge against risk, right? Stock options, I guess you could call them equity options. They hedge against risk against stocks, indexes, and ETFs. Of course, like I said, what I like to do is use them a little differently. I like to sell their premium to generate income, especially right now. Options are being bought big time to hedge against risk right now. There's an incredible amount of fear in the market. And what that's done is that has caused options to go well up in price. And for people who sell options, do you guys remember the movie Trading Places from the 80s with Eddie Murphy and Dan Aykroyd? And do you remember the last scene where they were in the open outcry pit? And how did they win at the end of that movie? They were always on the correct side of the equation. When there was a lot of buying that needed to happen, they were there selling. When there was a lot of selling that needed to happen, they were there buying. In fact, I think if I remember the movie correctly, they did in the opposite order. They were buying and then they were selling, right? Well, I make sure I'm on the correct side of the equation. Right now is the perfect time to be selling options to people, because options are going for a very high price. The other thing we know about options is when they expire, their premium is worthless. Options act like an expiring coupon. So let me ask this question. Do you guys even know who I am? If you don't mind typing into the chat section, have you guys heard of me before? AJ Brown, option trader. Okay. Some of you are saying yes. Some of you are saying no. I'm just going to quickly show you. You guys can get a hold of me all kinds of different ways. You can even phone me. Just remember tt4.me, and then whether it be YouTube, podcast, Facebook, Twitter, you can go subscribe to the articles I write, read my white papers, all that good stuff. In fact, Might as well subscribe to some of them. Helps my YouTube algorithm. I founded this company called Trading Trainer back in 2003. Some people call me the world's most disciplined options trader. I think actually when I turn my back, they call me the most lazy options trader. I like to think of myself as the most efficient option trader. And that's because I don't like to spend any more time than I have to in front of the computer doing this stuff. Talk about having good planning capabilities. I've been trading options since 1997. And I've been publishing stuff for my Trading Trainer participants, my daily insights, every day since 2002. There's an ebook out there that I wrote back in the day that seems to be on everybody's computer. Home study course that seems to be on everybody's bookshelf who trades options successfully. The key is I'm a learner, right? I don't know. I'm not anything special except for that I've been doing this since hammer was a hatchet. But I don't have any, like, I wasn't born into pedigree or anything. I went to college and I became an engineer. And I learned a lot about business and investing by taking all my elective courses in the business school. And in the last 15 years, I've really focused on taking some continuing education, on making sure I know how to teach. Because there's a lot of people out there that know stuff, but you try to learn from them and they don't know how to teach. So I try to make sure I know how to teach as well as know how to do things, right? But when I first started back in the late 90s, I lost big time. In fact, I spent $27,000 going to these weekend seminars. Back then, there wasn't many web seminars like there are now, like we are at right this minute. Rather, you had to go on the weekends to these hotel things where you'd go for half a day on Saturday. You spend like under $100 usually. Then at the end, after they teach you just enough to be dangerous, they say, come back Sunday, spend a couple $100 on us, spend $500. And then you come back Sunday. Next thing you know, you're on an airplane somewhere. You're spending a week and you've outlaid over $1,000 or couple $1,000. I spent $27,000 back in the 90s. I don't know what that's worth now. But the more important thing is I tried to trade all these things with no discipline, and I lost $85,000 in stupid investments. So I figure I spent this much money on a second college education, if you can kind of do the numbers now. Again, that's worth a lot more now than it did back then. But let me have you write these down, please. This is how I cracked the code to be a successful investor. You should do the same. First of all, pick out what you want to invest in. Stop chasing every shiny object that comes your way, right? Pick one thing and master it. I chose options because I knew that options were ultimately flexible and could be traded in every situation. And so that's my thing. It also fit my lifestyle. And a lot of you should really take a good gander at your lifestyle, right? If you're not looking to be somebody who is chained to your computer, then, day trading may not be for you. I'm an end of day trader myself. I come in at the end of the day. I spend no more than probably about a half an hour looking at what happened for the day. And then I program my automatic trading platforms with my trade plans for the next day. And then I close the computer and I don't see it again until the next day. Anyway, stop chasing shiny objects. Settle on one type of investing and learn it well. Number 2, hire a mentor who is currently doing what you want to do and knows how to teach. There is this thing called trial and error, and it turns out trial and error is a pretty freaking amazing way to learn. But it's slow, and it's like recreating the wheel. So the next best way to learn after trial and error is called guided discovery. And that's where you walk in the footsteps of somebody else who's already doing what you want to do. And so I recommend you do guided discovery instead of trial and error. Plus, guided discovery, even though you have to pay up front for the teaching or the mentoring, is way cheaper than trial and error when it comes to trading. Also, join an investment group. That's what I did. I spun my wheels for 3 years, lost over $100,000 to stupid trading. Finally, I joined an investment group and everything started to synchronize. First of all, I could look over other people's shoulders. And although some people call it cheating, I called it leveraging with pride. When people in my investment group would come with a good trading idea, I would take it. And when I came with a good trading idea, they would take my idea, and that was fine. But also, when you're in an investment group, you have other sets of eyes on what you're doing. And so if you're about to do something stupid, when you're a lone ranger, you'll just do something stupid and you'll lose a lot of money. When you're in an investment group, you'll have 4 other people tell you you're stupid before you do it. I always love it when people tell me I'm stupid. It means I just saved a lot of money. I never take it personally. Do you? Join an investment group. And finally, surround yourself with like-minded investors, especially right now, where regular normal people that surround us think they're losing money in their 401k plans and stuff. They're going to tell you that being an investor or being a trader is risky. And that little voice is going to gnaw at your insides. So instead, surround yourself with like-minded investors so that you're getting influenced by positive words, not negative words. So this is going to be critical because this is what I did. And this was the difference in 2001 from me having yet another losing year of trading to all of a sudden over the subsequent 10 years from 2001 to 2011, taking an account that was a $5,000 IRA account and making it up to 8 figures. One last thing about me. A lot of people might have already know this about me. I started a foundation where I take historically underserved inner city kids off the street and teach them how to invest. I started this actually in 2003 with the 9 investors. You can see a handful of them right there in that picture. This is a picture from 2003. This is a bad neighborhood outside of Denver, Colorado. And now we've partnered with the Chicago Board of Options Exchange, and every year we're graduating over 200 folks from Southside Chicago as part of our program. And I'm teaching them the same stuff I teach folks at Trading Trainer. So it's kind of a cool, fulfilling thing. So that's what I like to be known for. That's my claim to fame. So let me tell you more about this options trading and making a plan around it. So I focus on 4 simple transactions. I like to write covered calls. I like to write covered puts, like what I'm going to be doing on that Schlumberger trade. I like to write covered calls against back month leap options. That's kind of supercharging it. That for you, like option traders out there, that's a bull call diagonal debit spread. I leg into them. And I also like to write covered puts against leaps. In other words, I leg into a bear put diagonal debit spread. Those 4 transactions, right? In fact, 3 of those are cash trades, which I can do in my retirement account. One of them, the writing the covered puts, The covering position is a margin trade, so it requires a margin account. And when you look at options, you know that options have two components in their price, right? When I look up an option selling price, like right now, if I come over here to Schlumberger and I switch over using my Thinkorswim here to look at these option chains, you can see a bid in and ask price for any particular option. This is the January 2023 $55 put. That's the one I'm thinking about buying today, right? And you can see it's trading at, if we look at the halfway point, it's trading at about $12.60 right now. Well, part of that $12.60 is in the money and part of it is premium. Here's an example so you get an idea of what I do. I think I checked this price about a week ago, maybe a little bit more. Ford was trading at $13.50. So we buy shares of Ford, and then we go ahead and sell right back the Ford June $14 call for 62 cents. So what that does for me is that gives me a credit against the Ford stock. I lower my break-even price. I collect what I call an instant dividend. Options are sold in lots of 100, so my instant dividend would be $62 per option contract sold. And that $14 call is going to act like an expiring coupon, because as I get closer to June 17th, the premium component of that value, well, it's going to get less and less until finally at the expiration date, it's going to be worth nothing. So what happens if Ford closes above $14 on June 17th? The day that it expires? Well, I'll have paid $13.50 for the shares of Ford. I'll get $14 back for getting called out or exercised. So I'm going to make 50 cents of profit there per share, as well as the 62 cents of profit per share for selling the call in the first place, for a total profit of $1.12 or 8.7% ROI. Not bad for a few days holding Ford. But what happens if Ford is flat by June 17th? So if Ford is flat by June 17th, I spent the $13.50, I get the 62 cents back by selling that Ford 14 call. It expires worthless. I get to keep that 62 cents. I also keep the Ford stock. I made 4.8% ROI, and the keywords here are so far. And I'm going to do it again and again and again. And finally, a lot of people say, well, what if it goes against you? What if Ford drops? Okay, I spent $13.50 on Ford stock. I get my 62 cents. That 62 cents lowers my break-even price to $12.88. That means Ford is going to have to drop all the way below $12.88 for this trade to go into the red. And stay tuned. I am going to show you how I reduce my risk on reward even further. But inherent in this particular strategy, I have a profit buffer of 62 cents on the Ford stock. So that's very good too. So just really quick, little quiz to see if you guys are paying attention. When I sell premium, what do I create? And by the way, there's more than one answer here. Do I create an instant dividend? Do I create a discount on an underlying security? Do I create a profit buffer? Do I have an expiring coupon? What do you think? A, B, C, D, all of them, none of them? Getting some of the answers in the chat section. That's awesome. So when I sell premium, I get all of that. And that's why I like to do that. But now we got to think about that whole planning process, don't we? Now, some of you might say you only made 4.8% ROI. When I think about trading, I'm thinking about making a lot more money than that. So what could we do to lower how much money we have to put into the trade, increase our returns, and maybe even convert a margin trade into a cash trade? What do we have to do? Should we be selling options that are even farther out in time? Should I replace that security with options trading at parity? Should I just give this whole thing up? Or is what you're talking about impossible? What do you guys think? So let me just tell you, a lot of people are saying A, sell farther out in time options. Options have a very interesting expiration curve, which means that as you go farther out in time, they don't profit as quickly. And when you sell options, you kind of put yourself in what's called an obligation to perform. And so you kind of want to be under that commitment, that obligation to perform for as little time as possible. So selling out in time options may not be your best option. No, what we're going to do is we're going to replace that security. So instead of buying or shorting a stock, let's find something that is lower in price, but has the same movement. I like options trading at parity. Option premium is the most when the option is at the money. But when we go deep enough in the money, an option has very little premium. In other words, what we do is we pick a deep in the money option that behaves exactly like the underlying symbol, dollar for dollar, but at a cheaper price. Right? When I was trying to play Schlumberger, or like I am going to be playing Schlumberger, I'm looking for Schlumberger to top. And as soon as it tops and it starts pointing down, I have two choices. I can either short Schlumberger, or I can find a cheaper put option, a deep in the money put option to buy. Think about that. Shorting requires a margin account. Buying or going long doesn't. That's a cash trade. So by substituting my stock with an appropriate option that moves dollar for dollar, in this case, the put option will move dollar for dollar, but in the inverse way, I can do all sorts of things. I can get a cheaper original asset, my back month option instead of the stock, and I can turn a cash trade into, or a margin trade into a cash trade. And so that's what I'm doing here. Now you might say, okay, I go deep in the money, but if I'm going to buy that, use that substitute option, how far out in time should I go? Well, I'm going to recommend, write this down, you go out at least 8 months and probably use a leap. And the reason is because options like leaps have a lot more liquidity. There's a lot more trading on them. And whenever you're trading something, you want there to be buyers and sellers. So go at least 8 months out. And the reason is because if you're like me and you sell premium, you want to continue to sell premium for many months. And it turns out a majority of premium trades end before 8 months. But you don't want your back month option expiring before you've sold as much premium as you can. So go at least 8 months out and use leaps if you have to. So here's an example. I could buy that Ford for $13.50 a share, or I could instead buy the Ford January 2023. So that's right out there in about 8 months, $7 call. It's less than half the price. Its in the money value is 97.4%. Its premium value less than 5% is 2.6%. So I can use this option instead of Ford stock. So I pay $6.68 for this back month option that acts just like Ford stock. I get the 62 cents back for selling the front month option. I get that instant dividend. It acts like an expiring coupon. It gives me a discount on the break-even price. If Ford closes above $14, don't forget I spent $6.68 per share of that back month option. I'm going to get $7 back. That's because I get exercised at $14 and I do some exercising at $7. I get to keep what's called the spread. So I get $7 back. I make 33 cents per share of profit. I also get to keep that 62 cents, which gives me a total of 95 cents per share or 15.6% ROI. If Ford is flat, this is actually the ideal case. I've got that back month option that doesn't expire until January of 2023. I got that 62 cents by selling the premium, the front month option. That front month option expires worthless. I keep the 62 cents. I've made 10.2% ROI so far, and I'm going to do it again and again and again and again, as many times as I can. This is great, right? 10.2% per month. One transaction. And if it drops, don't forget about that profit buffer, reducing my break-even price. In fact, let me show you a real live trade that me and my program participants did together on Delta Airlines. On March 17th, we bought some Delta Airlines $15 calls that don't expire until January 2023. I spent $21.57 per share after commissions, $21.58. Then a few days later on April 5th, we sold the Delta Airlines April 14, so expires just 9 days after that, 39.50 calls. I made $1 per share by selling those. Then we just waited. And on the expiration date, yes, I got exercised. And so I did exercising. By the way, that sounds complicated, but it turns out your broker does it all for you. And I walked away with $24.50 per share, or a total of $3.91 profit after commissions, 18.1% ROI. Not bad, right? Just 2 transactions, March 17th, April 5th, and I'm walking away with 18.1%. Talk about being an efficient but yet lazy trader, right? Now, the last piece is we want to reduce our return on risk, our risk on reward even further. So what do? Should we sell half as much premium? Sell out and time options? Hopefully I know you guys know that that's the wrong answer now. Should we collar the investment by marrying a protective option, or is what I'm talking about not possible? Check this out. This is another real life trade. This is a trade that's been going on for quite some time, as you can see by my trade log here. But let's start up at the top when I started this trade back in 2020. I bought Pan American Silver, 600 shares, paid $34.73 a share. A few days later, I sold the September 36 call, but I also bought the January $34 put. By buying that January $34 put, I now have a protection of what happens if this trade goes below $34. Now, I spent a little bit of money on that. I spent $4.75. And you might say, why would you make $1.76 by selling the premium, but then go and spend it plus a little bit more, $4.75, in order to protect yourself? Well, you'll notice I'm legging in and out of these positions. So expiration date came. So when expiration date came, it expired worthless. I got to keep that $1.76. And as soon as I no longer had that obligation, that premium in place, I was able to sell back my protective option and I sold it back at a profit. So not only did I get to keep the $1.76, but now I got to keep the $1.15 that I made on rolling out my protective option. So some of you might be saying, oh, this is getting kind of neat. He's making money selling premium, but he's also making additional money rolling out his protective option. He's protecting himself, but he's turned that protection from a cost into an income, a profit. I did it again. I went ahead and sold premium the next month, $1.47, and then I bought protection, $3 and a penny. Time rolled on. The $1.47 expired worthless, which means I get to keep it. And when I sold my option again, this time I made 61 cents per share. In fact, take a look at this column here, the cost basis. Notice what happened after that first month. After that first month, my cost basis went from $34.74 and a little bit higher when I bought that protective option, $37.75, all the way down to $31.86. And then it kept going down from there. Now think about it. What does it mean when you're protecting your trade to 34 or lower and your break-even price is $31.86? It means you've insured yourself for more than you have invested in there. That's called a risk-free trade. And these positions that I'm doing, although they look complicated, what's cool about them is usually within the first 30 days, they become risk-free trades. That means I'm just letting time go by. I do 1 or 2 transactions per month. I've got this risk-free trade and it winds up paying me somewhere between 10 and 20% per month. You get this whole thing on autopilot. So now you might be saying, this looks like too much complexity. This would drive me crazy. I don't understand this. My emotions are through the roof. Well, we break it down into 3 steps, right? We're either going to buy or short an underlying security, or instead of doing that, we're going to just buy a substitute option, trading at parity. Then step 2, we're going to sell a near-term at-the-money option for its premium value. We're going to collect that instant dividend and set up that profit buffer. And then we're going to collar with a married option that is 3 to 6 months out in expiration to protect our investment. We're going to leg in. So if we're doing a covered call, we'll buy at the bottoms. So this is when we buy that underlying stock, or we buy a call option trading at parity. And then at the top of these sideways channels, we sell back the near-term call option and buy the protective option. We let the near-term call option expire worthless. We roll out the protective option, and then we rinse and repeat. If you think about it with respect to our transactions, where are we actually doing transactions? We're actually doing transactions. An original transaction here. And then we do the premium transaction there. This happens automatically. It expires worthless all on its own. And we do a transaction here. So we do 1 or 2 transactions every month. And that's it. For you day traders, that would be really simple, because we're not trading every day. We're trading every month. We're just managing these positions. We're following our plan. And if you're doing this, by the way, on a put, it's kind of the same thing, but you start at the top. We either short our underlying, buy our put option, sell the near-term put option, buy the 3-6 month, let it expire worthless, and sell that option back. Now, again, you're probably saying this is too much. This is too crazy. And so what I'm going to tell you is, and this is what I kind of excited you about in the beginning, is you can take all of the repetitive part about creating a plan out of the equation and distill it down, including things like liquidity checks and risk management, distill it down into a simple little tool like what we use in our program. We give everybody this little tool where they fill in the blanks, like what's your portfolio size? How much risk do you want to put into your trade? What's the symbol? This is one that we did about 2 weeks ago on Macy's. In fact, we're following Macy's right now. I'm going to pull up Macy's really quick. You'll notice that Macy's, along with all the retail stocks, really got hammered, especially when Walmart, Target, all these companies really hit up hard against their earnings. They didn't make it. Target actually surprised people. I mean, Macy's actually surprised. And so Macy's is giving us a signal that perhaps it's found a bottom. And so we're actually thinking about our plan that we created a couple weeks ago. But we defined where we saw support and resistance. We defined where we would bail out from the trade. We just followed the instructions, right? And look at what it gives us. Here's our plan for writing the covered call. It answers the who, what, when, where, why, how many, and for what price. This little tool of ours also gives us the plan for writing a covered put. What do you do? Step 1, after a top is found, go short 400 shares of Macy's. Make sure you short it for higher than $25.36 a share. We also have a plan for doing the bull call diagonal debit spread. And finally, the 4th plan. Remember, I told you there were 4 strategies. Not only does our little tool create our trading plan for us, simple, right? 4th grader could follow it. It allows us to test it, right? Here is the back test that we did on Macy's. You'll see we also give everybody our little trade log so they can do back testing. Buy Macy's on March 14th. And then we go ahead and sell the call on March 25th. Buy the protective put on March 25th. And then on April 13th, we come out of the trade, right? And it shows exactly how this trade would work out for us. And we can take those numbers and put it into our testing wizard and see if our testing wizard likes it and what the results are. So if you automate your plan writing, take all the repetitive parts, especially the parts where you can run into clerical errors, take it out of the equation. That's what we do for our program participants. In fact, every Thursday, our program participants meet with us. They're meeting with us this evening. And they throw tickers at us. And we pick the best ticker of the week. And then we plan it out together. We all pull out our tools and we put in the numbers that make sense. And we all get a trading plan to follow. Now it's just a matter of following the plan, right? How much more disciplined than that can it be? Now, in the last 3 minutes of my little presentation here, I'd like to tell you about being part of our program. Taking this premium selling, which looks to be super complicated, and giving you the tools as well as the guidance. Join us every Thursday and you'll have another ticker to trade on how to use the tool and how to come up with trading plans so that you take all the emotion out of it. You take all the extra time out of it, all the spinning of your wheels out of it. You're never going to miss a pick. Minimize that amount of time you spend away from your loved ones. Have support whenever you need it. That's what it's all about, folks. It's all about saving time, being clear, and getting results. So our program is for anybody that doesn't want to pay for multiple data subscriptions, wants everything they need in one place, doesn't want to miss an opportunity, wants to spend more time doing other things, doesn't want to be alone, wants step-by-step instructions. You want consistent, reliable results. You don't want to be going into the options market with both guns ablazing. You want to follow a plan, and then you want to trade that plan. So part of our program is all of this good stuff, the video tutorials, the monthly live classes. Oh yeah, we have a monthly live lecture class. We have all the screeners for finding the ticks. We have the planning tools, which I showed you today, the ones that make the trading plans for you. The weekly live workshops. Oh, and there's one other thing I have to tell you about, and that's whenever you have a trading plan, I want to personally review it. Send it to me. I'll review it, and I'll make sure that you're not about to do something stupid. I'll make sure you filled out your tool correctly. I'll make sure the plan makes sense. So what would that all be worth to you? Well, let me throw this in there. Last thing. I like people to work with me for 6 months. That doesn't mean it's going to take you 6 months to pick this up. In fact, you'll probably pick it up in a matter of weeks. I just want to be there with you for 6 months so that you get a lot of experience. And you also have me looking over your shoulder whenever you want me to review your plans. So try my program for 6 months. If you don't turn a profit after applying everything you learn from our program, then not only am I going to give you your money back for what you paid for the program, I'm going to give you double your money back, right? And I've actually been running this program since 2007. I'm good for it, I promise. And I'm going to give you a bonus strategy session with one of my folks so that if you really want to accelerate from point A to point B, where you are right now to where you want to be, they'll give you guidance. They've followed it, right? They've done the same thing. So what is all of that worth to you? Think about it, because my program costs $600 for 6 months. And actually, since I love the folks at Synergy Trader, Anka and David, I'm going to, just for the next few days, let you be part of this program. If you want to be very disciplined, if you want to take all the emotion out of it, I'm going to drop it by $100. Here's what you got to do. Write down this website, and maybe they'll put it into the chat for you as well. optioninvesting.org/synergy. In fact, I'm going to, actually, I'm out of time. I was going to go ahead and type that in, but if you go, here's the key. Make sure you put promo code 100DISC, because otherwise it'll say 597. Put in that promo code. It'll drop down to 497. Folks, I'm at the end of my presentation. If you have any questions whatsoever, just give us a call. There you go. I just noticed the chat function just opened up. So in the chat, it tells you exactly the website to go to. If I go to that, I'm going to go to it really quick and show you guys. I'm pulling it up as we speak. There it is. You should come up to some sort of page that looks like this. There might be a please wait while it's trying to figure stuff out. There it is. And see how it says 597? come over here, 100 DISC, make sure it's all capitals, click apply, and it drops it to $4.97. Folks, thank you for your time. I hope you picked up some cool tidbits from my presentation about planning, as well as some of the option strategies that I do and how I take all the guesswork out of it. Thank you, Anka. Thank you, David.